Well, good afternoon. Thank you for joining us today for our very first webinar hosted from our Campbell Jones Cohen CPA studio. This has been a long time in the making, so we're excited to finally have a webinar from here today. Today, we're going to be discussing the Inflation Reduction Act of 2022 and its impact on the IRS, and more importantly, on our clients and you that are listening. My name is Lisa Jones. I'm a partner here at Campbell Jones Cohen CPAs, and today it is my privilege to interview my partner, Revenue Agent Exceptional Jack Cohen. We would love to try to answer some questions for you today, so feel free to type in the Q&A throughout this webinar. If anything comes up that you want us to answer, we'll do our best to try to get to that. Before we get started, Jack, can you tell everyone a little bit about your background, how long you were with the IRS,
Sure.
And why you're so exceptional?
So basically, I went to work for the Internal Revenue Service when I graduated college. They hired me as a revenue agent, and it turned out I was pretty good as a revenue agent, and I would get many high-profile audits, only because I was pretty good at this. And Muhammad Ali was one of my audits, and I.
Are you allowed to say this?
I can.
Okay.
I can. It's too late. It's out there.
I'm just trying to keep you in line.
Well, he's dead already, so
Okay.
I don't
So
think
it's
he'll be
okay.
complaining.
Okay, good.
That's right, and
Good.
I don't work there anymore, so.
Who cares?
I used to audit automobile dealers. I put one of the older Chevrolet dealers in Philadelphia out of business as an agent. I know, within IRS circles, that was important.
All right.
And basically, after a short period of time, I became a manager at IRS and had numerous different jobs over the years. I kind of finished my career as a manager of large corporate audits. So any Fortune 500 company in the Philadelphia area, I probably managed the federal tax audit of. And I actually was the #1 employee in the nation in large corporate audit in 2006. Coincidentally, the year I retired, figuring that I probably better retire while I was on top, okay? And so I did. And then I retired to Las Vegas and unretired and went back into public accounting on my own. And I met Lisa and Gary, and we merged our firms in January of 2013. And the rest, as they would say, is history. We were probably, could be, maybe one of the largest local firms in town these days. I mean, not too many CPA firms have their own recording studio. I'm just saying.
True.
Okay.
And we're very excited to have you on the other side, that you come over to our side, away from the IRS side. And I think we talked about we're kind of celebrating our 10th year together.
We are, absolutely.
Yeah, so we've been
Actually
doing this
longer than any of my marriages, as it turns out. Go
True,
figure.
true.
Go figure. We've already set records of sorts. There you go.
All right, so I think a good place to start today talking about this is just how does the IRS, everyone's worried about being audited by the IRS. Recent headlines have had our clients asking a lot of questions about this. They're worried about it. How do they go about selecting who is audited? Is it just rich people? Is it just poor people? Is it certain professions? How do they select it?
Okay, so there's two major ways most people would normally get audited. And one has to do with what we used to consider correspondence types audits. So for example, what happens is when say a bank or someone else turns in an information document about you, say a 1099, a W-2, the IRS has a matching program where they basically match the documents that they received to your tax return. And if there's something missing, you'll get a letter from the IRS asking you to explain the difference. Now, for IRS purposes, they actually consider that an audit, even though it's kind of not like an audit like most people would think of.
I never tell people those are not.
Yeah, well, let's just start out by saying too, if you get a letter in the mail from the IRS, it's generally not going to be a refund check. It's generally bad news, okay? But so a large percentage of IRS audits are these correspondence types audits. And of course, hopefully you do a good job preparing your return and you record and you make sure you include all those 1099s and W-2s. The other way they select returns for audit is somehow what we would believe is the more conventional sense, say you have a business. And what happens is they actually do statistical samples on audits. And they draw a sample from these audits. And from that sample, they actually come up with a formula. The abbreviation is called a DIF score. That's discriminant information, return, I guess. or, anyway.
It's a diff score.
Yeah, it's the diff score. Basically, every single tax return that gets filed is graded, kind of like a test score. And it'll look for certain comparisons on returns. For example, if you had low income and high contributions, that would add to the diff score. Back in the day, if you had a casualty loss, that would add tons of points onto a diff score, namely because most people didn't know how to deal with a casualty loss on a tax return. So in theory, I'm not saying it actually works, but in theory, the tax returns with the highest scores have the highest probability of error. So when you file your tax return, they score it. And then at some point in time, when they want to have to send tax returns out to audit, they start with the highest scores first. And this score is a big secret, kind of like the secret formula for Coca-Cola. Nobody knows how it works, okay? Although I think I did have one client who swore she knew how to do it. However, she was already getting audited by the IRS, so I guess it didn't prove correct.
But I do think one of the good things of, like we've learned over the years, just doing a lot of tax returns and seeing notices, we do start to notice patterns of
Yeah, I mean,
when things happen and.
sure, I mean, IRS is always maybe working on different projects. And so remember, in addition to just the numbers on your tax return, you're also putting other information on.
Mhm.
You're putting industry codes and occupations, and a lot of that is factored in as well. And so, so nobody knows exactly why a return will gets kicked out for audit. Now, again, having worked with the IRS a long time, when I look at a tax return, say we get a new client from someone else and I look at the tax return, I can tell pretty much if the return looks bad. So yeah, and so that's basically how they pick returns for audit. And again, you have to also remember too that and we're going to talk about this a little more in a few minutes, they do have a limitation on how many audits they can do because they don't have that many people left to do it. And that's a huge issue, and that's going to ultimately get to the point of this whole webinar or a Zoom meeting about why they're doing what they're doing. And so I want to mention one other thing too, if people are interested. The Treasury Inspector General does a report card on IRS every year. And in that report card, they actually detail exactly the type of returns that they audit by category. So for example, last year, if you filed the subchapter S corporate return, statistically, the odds of getting audited are down. They were pretty low to begin with, they went even lower. It's 1/4% of all the sub S returns that are filed are going to get audited. Now, I don't know how you think about this, Lisa. I think about that as pretty much slim and none.
Yeah, not a big chance.
Conversely, if you were a higher income taxpayer and you filed just an individual tax return and maybe you had a Schedule C on it, I think the percentages probably go up to about 6%. So what happens is when they do this stat sample, like especially with individual returns, they'll kind of stratify based on your income, for example, or in the case of corporations, they'll stratify that sample based on maybe the asset size. So it's not necessarily just one formula for everybody. It's one formula based on what category you fall into.
So what do you think is the best way people can protect them? I mean, we talked about there's not a huge risk for a lot of taxpayers, but what's the best way to protect yourself from an audit besides, of course, lying? What is the best thing?
But before I answer that question, I think the other thing that, and again, I don't know about you, but I've gotten this question before. I mean, clients are always asking me about the chances of them getting audited. And here's the thing, and again, this is going to sound like an oversimplification. I mean, you can do something wrong on your tax return for 15 years in a row and get away with it. They only got to catch you once.
Well, and I think sometimes I even hear my neighbor did this or my friend did this and the same type of thing. So they may be getting away with it for a long time.
It could be. I could assure you, even though no saying how the outcome of the audit will be, the truth is getting audited by the IRS is an absolutely painful process. I mean, you and I do a lot of representation work, and I think we do a great job of this. But at the end of the day, I don't think any taxpayer wants to get audited. I think it's I think it's kind of weighs on people's minds.
I think even if
The
they,
uncertainty.
what they call it is a no change audit, if they audit you and they don't change anything on your return, that's still a huge inconvenience.
It's
And
absolutely.
it's costly if they're paying us to represent them and,
Time, money,
Time, yeah.
aggravation, and quite frankly, depending upon the audit, and I don't know if you've ever had this experience, some audits are really complicated and they can last a really long time. I've had audits that lasted literally 5 years, if you can believe that. Is
so
that
what's
crazy?
what's the secret to protect yourself then?
Well,
Getting
I
audited.
think there's some easy things to do. The first item would be where I talked about where the IRS does that match and that matching program. On your personal tax return, you want to make sure that you've accounted for every 1099 and W-2. You know what I've seen before, and maybe you've seen this before, someone will be in business and they'll set up, say, a merchant account, but instead of putting it in a corporate name, they put it in their personal name.
And then they'll get.
Now they get a
1099.
1099 in their personal name. Well, if you don't account for that on your personal return, I don't think you're getting audited. I know you're getting
For sure.
audited, for sure. So something as simple as that, just make sure that you've accounted for every information document that you get and account for it on your personal return. As far as overall for business returns, I would say, one of the things I think people have to do is just make sure they have really good records. I don't know how many times we've taken on audits for people and their books don't even reconcile to the tax return. And so you want to make sure, aside from the fact that you may get audited, you just always want to make sure that your records are in the best shape possible. You want to make sure you have a record keeping system like using QuickBooks. You want to make sure that the bank statements are reconciled. You want to make sure that you have an explanation of any adjusting journal entries. And so, and again, the IRS standard is that the return that you file is supposed to be substantially correct. So that doesn't mean that you can't make a mistake. People make mistakes all the time, but you want to make sure the return is substantially correct. So for example, if you know your income is understated for whatever reason, maybe we didn't have all the records, maybe there was another bank account that they never considered when they did your QuickBooks. You may not be able to look at your return and know it's $1,000 off. However, you may be able to look at your return and say your gross receipts are $300,000 off. So one of the things that everybody should do is before you file your return, kind of give it the once over to make sure it looks substantially correct and make sure that whoever did your bookkeeping or whoever's doing your tax return, you have to make sure they have all the information. If you have a secret bank account in Switzerland and you didn't tell us about it, well, guess what? That could be a problem. And many times, here's another, going back to how you get audited. Many times you could get picked up for audit based on another audit. Say another company you were doing business with gets audited and that company pays you money. And it turns out that the money that they paid you is more than you reported as gross receipts on your return. I don't think you're getting audited. I know you're getting audited. So you want to do your best to make sure the return is substantially correct. I didn't say perfect, but as correct as possible. And you just want to make sure on your personal return, you account for all those information documents.
My experience too has been that if we've got good records and we're going through an audit, we kind of, again, maybe not perfect, but we can support and we look like we're doing things the right way and we're looking like we're handling things correctly. Those audits seem to go a lot better than the notices where we have no set of books and we're trying to scramble and get
they're the
receipts
worst.
and that type of thing too. So a lot of it really is just giving the agent some kind of level of comfort that we're doing it the right way. Would you agree? That's,
In other words, the credibility to taxpayer comes into play too. If we can hand them a perfectly balanced set of QuickBooks, which means we've accounted for every dollar in and every dollar out, and we're able to reconcile to the tax return, that starts off on a good direction of being able to establish credibility, as opposed to, we have no idea how you came up with the numbers at all. You used an adding machine tape.
or made them up, yeah.
Or made them up.
Yeah.
Or you never went through your bank statements. And so, and again, as an agent, if I started an audit and I couldn't even get the first page because you couldn't even figure out where your numbers came from, guess what? I'm smelling blood already. I know there's going to be a problem.
Yeah.
So the better job you do if you do get audited, the easier it'll be to get through the audit.
Yeah,
So-
I agree. Record keeping, it's huge. So the last couple of years have been a nightmare for us, at least. Probably anyone that's tried to call the IRS, got an IRS notice or anything of the sort, since wasn't good before COVID, and COVID really
Oh,
didn't make
yeah.
it better.
That was like
So
the final nail in the coffin.
yeah, I mean, I think my average time trying to get through the IRS now is like 72 phone calls, and then they finally pick
That's
up
bad.
and not processing mail. We've had clients send in checks and not get cash, so it's been hard the last 2 years. So what's kind of your take on the state of the IRS now?
It's been bad for probably the last 10 or 15 years. The truth is the IRS depends on funding from Congress to hire. And unfortunately, unlike a private sector company, the IRS never hires ratably. It seems like they could go for years at a time and all of a sudden want to go out and hire a bunch of people. But as it turns out, the actual number of employees that IRS has decreased dramatically from the last 10 years. It may even be half as much, I'm not sure. It's really, really, really bad. And to make things worse, a lot of the people that have retired or are eligible for retirement are the ones with the experience. So it's a twofold problem. They don't have people in general, and they don't have really a bunch of experienced people. And how it affects us, of course, how it affects the IRS, they don't have any people to audit, but also they don't have anybody to answer the phones.
Mhm.
I don't know if you've taken notice of this. Take a look at some of the notices you're getting from IRS. You will be hard pressed to find the phone number on them.
They don't want you to call.
They don't want you to call, that's exactly right. They send you a notice saying you owe us money, and they tell you, go to the website, and here's how you pay. Find me the phone number that you're
Right.
supposed to call. There is no phone number. And so and again, I'm not trying to get anybody to feel bad for the IRS. However, they are severely understaffed. And the other thing to make it even worse, they dumped all the stimulus problems on. They had to take care of all the stimulus checks, these advanced childcare checks. So they put way more burden on the IRS to do things, and they just don't have enough people to do it. And how that really adversely affects taxpayers, quite frankly, is that, and this is my opinion, of course, the actual level of compliance amongst taxpayers is at an all-time low. When the IRS doesn't audit anybody, or you personally don't get audited, sometimes that gives you the go-ahead to try and do like really shaky things on your tax return, because you figure, well, what the hell, they're not gonna audit me. And I don't know about you, but I've seen in the last several years, some of the tax schemes I've seen come across my desk are just absolutely incredible. And if I am an honest tax-paying citizen, I want to see these other people get audited. I want to see people pay their fair share. So if you're involved in some kind of a tax scam on your tax return, that really adversely affects all the good taxpayers out there. So the truth is, if I'm a good taxpayer, I wouldn't care how many other audits took place. I want them to obviously audit the bad people out there.
Right.
But the truth is could have a positive income on me as a taxpayer. If everybody paid their fair share, then the honest people would probably be paying less. So again, I just think that we have to take into consideration, they've been understaffed for a long time, and they desperately need people, and not just to audit, they need people to answer the darn phone calls.
Right.
So.
Okay, well, the Inflation Reduction Act of 2022 provides for $80 billion to the IRS. And the headlines recently have been that they're hiring 87,000 new agents. And I don't know about you, but I don't even know how many times I've gotten the question, are these 87,000 agents coming for me? And kind of my response is, I don't even know where they're going to find 87,000 agents. But how concerned do you think average taxpayer should be? And what are your thoughts on it in general? Like how is this funding going to affect the IRS, and should we be worried or not?
Well, not only do I get the question a lot, I've even got the question where they're saying that these agents are all going to
They
be
have
armed.
guns? Yeah.
Now, any of you have ever met me in person, I'm 5'7" and like maybe dripping wet, 150 pounds. Trust me, if they had given me a gun, I'd have more likely accidentally shot myself than anybody else. I could barely hold the briefcase, okay? And so So the truth is, a lot of that money in that appropriation is not just for employees. It's to upgrade their computer systems. Take my word for it, their computer systems were outdated probably 10 years ago. I mean, they are so far behind the pack, it's unbelievable. So it's to upgrade computer systems, just to upgrade every hard and intangible asset that they have. And amongst which is to hire more people, which they dearly need. However, keep in mind, number one, that 86 or 87,000 was basically to be scheduled over a 10-year period. So that's number one. It wasn't going to be 87,000 people at once. And if any of the listeners there are in business and you've tried to hire anybody lately, trust me, they ain't hiring anybody. There's nobody. Nobody wants a job these days. And so that's another issue. And of the people that they do hire, a very large percentage will be for what I consider to be more non-technical positions. In other words, not agents, not auditors. They need people to process returns. They need people to process money that you send in. They need people to answer the phones. Going back to what you said, how we can't get through. Most people don't know this, where most taxpayers have like a general number to call in for information. Preparers, we have our own number to call in. And guess what?
They
don't answer our phone call either. I mean, I literally, when I can even just get into queue, it's like the equivalent of hitting a lottery that day. Now, once you get into queue, you still have to hang on about an hour or so. How many times, Lisa, have you actually gotten them on the phone and they accidentally hang up on you?
Well, I think I told you last night, I was happy to be in the queue. I waited for an hour and a half and then they came on to tell me they were closed for the day, so.
Oh, I've had
yeah,
that before.
so-
How about this? Not even closed, their shift was ending.
Yeah, they're done.
Their 8 hours was up, I'm sorry, can't answer any more questions. You're gonna have to call back, and I'm thinking, it took me 5 calls to get in the queue. I waited an hour to get you, and now your shift is over, and I gotta
Try
call
again
back
later.
again. It's not going well. And here's the other thing too, and I know you see this, a lot of times we're put in a position where we have to call the IRS for our clients. And the clients get mad at us. Like, why aren't you getting back to me? Like I'm somehow not trying. Let me make this clear. We don't own the IRS. We don't have a hotline to get through. We're just like anybody else. And we can be trying all we want. If we can't get through, we can't get through. There's nothing we can do.
But that's really frustrating as a taxpayer,
Of course.
especially if you're getting a notice or an audit notice and you're nervous about it, you're scared about it, to not be able to.
To answer.
Yeah,
Right. Or what if you get a notice that they're about to levy your bank account or garnish
Yeah.
your wages? And there's not even
and
a
they won't
phone.
answer.
Well, if there was a phone number on there, which in many cases there's not, can you imagine how panicky you'd be? They're gonna garnish my wages in 30 days and I can't even get them on the phone. They have literally taken the service out of Internal Revenue Service. That's all I can tell you. Now, I believe that the current commissioner's term is up very shortly.
Are you up for the job?
Hold on.
Okay.
I'm just kind of throwing my hat in the ring here.
Okay.
And so this commissioner, I believe, was appointed by Trump. Not that that has anything to do with it, but I think they're like 6-year terms, if I'm not mistaken. So I have let it be known that I am available, although I would have to take a huge pay cut and move from this beautiful weather here in Las Vegas
We'd
to
be sad,
Washington
yeah.
DC. Yeah, but I'm probably the only one who can fix this. And so, this thing is going to be recorded. We can send it to Washington, we can send it to Biden, send it to the Secretary of Treasury.
And then no audits for any clients of Campbell Jones Cohen.
Well, I don't know if I can promise that, but I mean, I would think we would definitely be a more popular firm at that point in time. And so, yeah. So, but I would say, to answer your question, there's no real reason to be concerned. There really isn't. It hasn't happened. Who knows when it's going to happen? It's going to happen over a long period of time. And at the end of the day, here's your ace in the hole. You have Campbell Jones Cohen. I personally have gotten audits over the years from other firms who just can't deal with the IRS. And so our firm has, a lot of experience doing this. Aside from me, Gary's been doing this a long time. We do a lot of representation against the IRS, whether it's audit or collection. And I happen to think we're pretty good at this. I do. I'm a little biased, of course. Of course, but I go into every audit situation and my mission is, I don't want to lose. Seriously. That doesn't mean I won't settle, I just don't want to lose.
Right.
Okay,
But I think the important thing of this too is it's not to panic on it, that it's nothing's happening too quickly, but obviously it is a focus. They're funding it, so there is gonna be more audits. I mean, I think we have to be prepared for that and kind of best practices, right? Like
right, no,
record keeping
I
and,
agree. And again, it's nothing you should lose sleep over, but the truth is the IRS really does need more people for everything, not just audits, but just to process returns, answer phone calls. And again, I think they're, let's put it like this, I think currently they may only have 80,000 employees. So to hire 86,000 more, it's basically doubling what they have. And the other thing I forgot to add too, Lisa, is the fact that even when they start to hire people, guess how they train them? They take people that have experience and they pull them off the line to do the teaching and the training. So in the short term,
it'll even be
actually
worse,
be
yeah.
less, they'll be doing less audits until they fully train the people that they're hiring. I had an audit start the other day with a newer employee, an IRS newer employee. Now the COVID entered into it, but I mean, she's been on the books, I think, for like 2 years, and I think this was like her first corporate audit. I mean, 2 years
It
later.
took a while.
Yeah, I'm just saying. Do you think I'm worried about that audit? Nah, not a shot, not a shot, not a shot. So, anyway.
All right, well, we got a few questions coming in. You ready?
Yeah,
You're
let's
for
see.
it? Okay. Okay, so the first question is, does the size of the business, the amount of income the business collects, and number of employees determine if the audit's gonna happen or not? Is it based on size? Does it matter? And there's a two-part of it, and does the length of time the company's been in business? So if you're a new company, are you more likely to be audited, or if you've been in business for 20 years, does any
I
of
think
that?
to answer the second question first, I don't think the length of time in business means anything. However, on corporations, they are stratified by size. It's based on the number of assets, not the P&L.
So not revenue or employees.
Not
like
revenue
this
or
question.
employees, but based on the size of the assets, puts it into a different category. And remember what I told you, when they do those stat samples, it's based on category. And I don't remember the exact code, the coding that they used, but say, for example, between 500,000 and 1 million was one category. Well, if you file a return with that amount of assets, your stat sample is going to be based on companies with that size of assets. So.
Got it. Okay, I have another one about, what about fluctuations from year to year? So if your income is really high one year, really low the next year, does that,
I get that question a lot.
does that look fishy?
I can't give you a for sure answer, but my understanding was every year stands on its own. And so if you had high income one year and you got a diff score based on that return, and then the next year your income went down, your diff score is going to be based on what that year's return looks like. And the proof of that would be, look at what happened after COVID. People's income was really high and then it dropped. Well, if that was going to be the criteria, hell, they'd be auditing everybody. And so I don't believe that drastic changes from one year to the other will add significantly on to your score for that return. So.
Okay, what about if you get audited in 1 year, are you more likely to get audited again?
So.
Does that make it better or worse for you?
Well, I can only relate back to my time there, and what would happen is I would start with one particular year's audit. Say I started with the 2020 audit, and I found a lot of significant adjustments. I, as the agent, would expand the audit and either go back a year if there was time left on statute or go forward. So the system itself doesn't necessarily create that, but the individual agent working the case, and I was a manager for a long time. So if my agent came in and said, hey, I got this 2020 return, like payroll was off by $200,000. Well, immediately I'd be thinking, well, if it was off for 1 year, it'd be off for all the other years too. So the truth is, it's in everybody's best interest to try and have the first year's audit come out good so that the agent would not want to expand it.
Right. Here's a really good question that we probably should have brought up. How many years can they go back and audit you?
The general statute of limitations is 3 years. There's a couple other exceptions. If your gross income's off by more than 25%, there's a 6-year statute. And if there's fraud, there is no statute. So for most people, it's 3 years. It's 3 years from the time the return was filed. So for example, if you were a delinquent filer and you filed a year late, it's
That pushes
3 years,
that off.
that's exactly right. And while we're on the same topic, there's a statute of limitations on collections. It's 10 years. So from the time the tax return posted and the tax was assessed, they have 10 years to collect. There are some things that could happen during that 10 years that suspend the statute of limitations. You do an offer and compromise. There's a number of things that will temporarily stop it. And then it'll start up again, but it's 10 years for collection.
This is another thing that I've seen, someone's asking about that I've seen a lot too. The president said that no one making under $400,000 is going to be audited. Do you think that's true?
I don't see how that's possibly true, because again, it's a computer that does this. Now, and generally, the executive office, the president, definitely does not want to get involved with IRS stuff. It looks really bad for politics. In fact, that was a problem I think that Nixon had. When he was in office, he had a hit list of people that he basically sent over to the IRS and said, I want you to audit these people. So since I don't think the president really has any direct control over the IRS audits, it's strictly a computerized system or the matching system. I don't think he can make that statement. I don't think it's correct.
Do you think there's a thought that when they're auditing, there's more money to get from higher income taxpayers, so we're more likely to go after them, that's kind of where?
That is a great question you raised, and one that I raised many, many, many years ago. The IRS is not a profit-making organization. If the IRS was a business, they would want to audit the returns that they got the most tax out of. Would that not make sense? However, they have, I guess, another duty to Congress, and what they're supposed to do is they're supposed to audit a little bit of everybody, if that makes any sense, just for compliance purposes. So even though they may,
kind of with the intention to keep honest people honest.
right, they want to keep honest, so they may audit returns that have nothing wrong in the face of the return, just so you know that they're there. And so what had happened, and again, when I become commissioner, I will fix this.
Okay,
just
good.
want you to know that. For example, when I managed large corporate audits, we got millions and millions and millions of tax. I mean, like, you'd have to audit a lot of little tax returns to get as much tax.
Yeah.
However, there were times when we were asked to take agents off those cases and work on smaller cases, so we would get coverage on smaller companies. And on one level, you can understand why that makes sense.
On another level, it's frustrating that why are they coming after me, right?
Right, why are they coming after my 1040
Right.
when you could be auditing these Fortune 500 companies and getting millions and millions and millions and millions? But that's on my to-do list when I get installed as
Got it,
commissioner.
okay.
Just saying, hear that, President Biden? I'm available.
Okay, okay, the question is, do you have a resource for those of us who change income streams? For example, went from retail executive on a W-2, retired, sold insurance, COVID made that difficult, moved and started rental property. Those are all different and hard for me to know how to keep records or even estimates, what is deductible or expense. So I think sometimes when you're a W-2 employee, you keep your W-2, that's pretty easy.
Right.
But when you're doing these different types of things, when you have rental properties, when you have a business, when you're self-employed, I think the spirit of this question is like, how do I even know what to keep or what's important for me to keep?
Well, certainly if you call us, we can help you. But, if you're in business, I mean, for us to do a tax return, it doesn't have, what you give us doesn't have to be fancy. For example, while we'd like to see everybody use QuickBooks, that doesn't necessarily have to be the case. People keep records on an Excel spreadsheet. There's absolutely nothing wrong with that. At the end of the day, you just have to be able to determine how you came up with the numbers that we put on the tax return, whether that's an Excel spreadsheet or bookkeeping, however system you come up with it. And you're right, as a W-2 employee, you don't really much have to worry about almost anything. They did away with most itemized deductions now. So the truth is most non-business returns are a lot easier to do these days, quite frankly.
And I think it's important too, if you're deducting business expenses, to keep in mind what expenses you incur that help you create income. So sometimes people will ask me, is this deductible or not deductible? If it's and sometimes it seems like that shouldn't be, but if it does help them produce income,
Sure.
then it's a deductible expense, right?
I think the rule is any expense that either increases your income or somehow affects your business is is a good business expense. And what I tell my clients is that if you're not sure what is and what isn't, I still want you to keep track of it and let me know and let me make the decision. I don't want people to not include things that may be deductible because they think it's not deductible. That's what they're paying me for.
Well, and I've run into situations where on surface, I think no way is this deductible, but then I talk to the client and they kind of explain how they use this for their business, and then they kind of convince me that it is.
It's for the
Yeah.
production or protection of income. And how many times have you ever, whether it's a new client or even maybe an existing client, you kind of talk with them at the beginning of the tax year and you're asking them, well, what happened last year? I don't know how many times people have told me about bad investments they made many years ago
Mhm.
and never said anything about
Right.
it. So it's almost like you have to interview them every year. I haven't talked to you since I did your return last year. Tell me what changed this last year.
Right.
Did you buy anything? Did you sell anything? Did you get sued? Just go through a litany of anything that affects money.
Yeah.
Tell me what it was and then let me decide if there might be a tax deduction.
I think that leads us well into this next question. Crypto has crashed and many have lost money. What is required to write this off? And do you know if that will trigger an audit? That is something the IRS is increasingly concerned
They
about
are
crypto.
cracking down on crypto.
There's that new question on the tax return this year.
Yeah. No, they're
Did you have any
definitely,
transactions?
they see this as a huge area of non-compliance. I think the IRS's problem is how to monitor and how to control it. That's been a big issue. Now, one of the things that's helped us are some of these, like the Coinbase thing, where they'll actually calculate your gains and losses for you. Keep in mind, when you said people have lost money, here's the catch. The value may have dropped from what the high was, but you always still have to compare it to what you paid for it. So if you paid 100 and it went to 1,000 and now it's 500, you don't get to write off that loss. You're still up.
Well, and for tax purposes, all of that is unrealized activity. It's
That's
not
correct.
until you actually
Sell,
sell.
that's correct.
That it's a taxable
Absolutely.
event. So,
Absolutely. So unfortunately, a lot of people who lost money on crypto in the last downturn, you're not getting anything for it. Now, when you close out your positions, that's, as you're saying, that's when you determine gain or loss.
exactly the same as stock.
It's like stock, that's exactly
So
right.
until you sell it, it can go
Yeah.
like this and it doesn't impact your tax return.
But that's a great question.
Okay, I think we have time for a couple more. Is there any type of algorithm that looks to see if people self-prepare or have an EA or a licensed CPA prepare the return? Well, I know you're gonna say, if it says Jack Cohen on it, that.
Well, that's all you need. All you need to know is Jack Cohen.
Do you
that's
think it matters? I don't know if it does or not. Like
As
if
far
it's
as
a self,
whether return is selected
do you
for
think
audit,
that's in part of that diff score?
I don't
whether you're
believe it is.
self-prepared or not?
I don't believe it is. Now, here's what's interesting. When I was an agent, if I looked at a return that on the surface looked really bad, if I had prepared, or if we're preparing a return and it looks shaky, would we not want to make sure that we dot every I, cross every T,
For
and
sure.
save every document? If I know it looks bad,
Yes.
I'm actually preparing the return.
Sometimes it looks
No.
bad and it's really not. It's
Right,
just on
that's
the
exactly
surface,
right. But when it looks bad and I'm preparing a return, I'm actually preparing it and keeping documents, thinking that it's going to get audited.
Right.
So the truth is, this is where maybe I don't totally agree with the diff system. Sometimes the returns that look the worst are the cleanest, and the returns that look the cleanest are the worst. You just can't tell by looking at a piece of paper sometimes. You just can't tell.
Yeah. Okay, what is the time limit of bad investments and also being sued?
Well, there is a statute of limit by being sued by the IRS or sued in general. There is a statute of limitations of being sued in general. I mean, I don't know what
But
that
we're not
is.
lawyers here. so
We're not
we should-
lawyers. That's right. What was the first
But
one?
what about bad investments, writing up, what is,
So great example, I bought stock years ago in US Airways. Immediately they went bankrupt. That's all I can tell
so
you.
you're not giving stock advice?
No, I'm not giving
Okay.
stock advice. However, I have done some other good investments.
Okay,
I'll tell you about
okay,
them.
okay,
I
okay.
just want you to know.
That's a different webinar.
That's a different webinar. But basically, you don't actually have to sell the stock to claim the loss. as long as you can clearly determine it's worthless, you could write off the loss. So in my case, I don't remember what I paid for this stinking stock, but when it went bankrupt, there was clearly no chance for recovery, and I wrote it off. I wrote off whatever I paid for it. So you don't actually have to close your position to claim the loss.
Right. Okay, do we have one more?
More examples of risk score criteria.
This isn't good how we have to do that.
You know,
We need a bigger font.
right,
next
the
time.
bigger glasses, or
Right,
yeah.
right.
Well, again, I don't know if I can answer your question. All I can tell you, and I'll repeat it, is they do random audits based on no diff score. And on those audits, it's a 100% audit. They used to call them, I forget.
Like a compliance
Like
audit.
a compliance audit, yes. And they will look at every single line item on the return. How hard they look at it is, there is some criteria, it could be up to the agent, but every single line item on that return is looked at. And then they'll compare they'll take those results from that audit and they'll smush it together with others that they've selected. And that's basically the stat sample they use to come up with the formula to do the grading. And the only easy example I remember from a long time ago is if you claimed a casualty loss on your personal return, I would say there's probably a 95% chance it's wrong. People had no idea how to claim casualty losses. If you claimed a casualty loss, you were getting audited.
Which is weird because the tax law is so simple.
Yeah,
I don't know why they'd surprise
people
by
scream that
that.
off. And nowadays, of course, you can't claim a casualty loss
Right.
unless it's a federally declared disaster area. That problem went away.
Yeah.
So I mean.
All right, well, I think that's all of our questions. Do you have any final thoughts before we wrap up for today?
Well, first of all, hopefully everybody liked the discussion today, and I know we like doing it. And kind of our plan is maybe we wanted to try and do this on a monthly basis. And what we like to do maybe is perhaps get some ideas from people watching as to different topics. As you can probably figure out, and Lisa already knows, I could get up here and talk forever on any subject you want, okay? But if you have any tax subjects or issues that you think would you like to hear more about, and we think it has applicability to other clients, we don't necessarily want to answer a specific question about your tax return, that would be fair, and we certainly don't want to put it over the airways. But if you do have areas or subjects that you want to talk about, I mean, we can always come up with some on our own. Popular these days are 1031 exchanges. I mean,
Crypto.
Crypto,
Yeah, good one.
we can do a crypto one.
Yeah.
We will not run out of subjects, take my word for it, but we'd rather do it on something that you guys want to hear about. And so if you could let us know, that would be great. You could email us or you could phone us.
office@yournevadacpa.com, or you can call us at 702-255-2330. And we just want to thank you for joining us today. We hope we brought you a little bit of value. If you have any questions based on what we talked about today, or have any suggestions like Jack just mentioned, please reach out to us. We're here all the time, aren't we?
We have no life, Lisa.
Yes, we have no life.
Pretty
We're here
much.
all the time, just waiting for your
Hold on,
questions.
yesterday was the end of tax season and we gave everybody off, but look where we're
But
at.
we're here
We're
doing
here.
this.
We're
Yeah,
here.
so that says
That's
it all.
right,
huh?
that says it all,
Right.
that's exactly right. And so, yeah, so thanks for listening in, and if you have some feedback specifically about what we talked about today, let us know that as well. Hang on, let's see something. Oh, look at this.
Someone
I got-
gave you X's and O's.
I get X's and O's. What can I
That
say?
makes it all worthwhile.
Absolutely, my
Right.
clients love me. What can I tell you? How's that?
Is it your
okay.
client or a stock?
It is my client, no, it
Okay,
is,
okay,
it is
just
my
checking,
client, I'm just
checking.
checking. We have a mutual love affair going for one another, it's true.
Okay, maybe we should cut off at this point then.
All right, everybody, hey, have a great rest of your afternoon, okay?
Thank you.
Thanks for joining us.
Okay, bye.